Welcome back. Well, we are continuing with our look at the latest political developments, and we're going to get some market reaction now to those developments. We cross to JSC, where our markets anchor, Nompumelelo Siziba, is standing by. Nompu, good afternoon to you. If you look at every time there's some kind of movement in that number one spot when it looks like President Zuma could be leaving, the markets seem to pucker. Is that the case today?
Thanks, Natasha. Yes, you're right. They do generally seem to pucker, as you say. But today we did see the rand losing some ground relative to the US dollar, to the New York close last night. It was around 11.88 at the New York close, and then it lost some ground going over 11.90, trading around 11.95. But it's now back at 11.88. To what extent that's influenced by the dollar movement or, in fact, local happenings, not quite certain, but generally speaking, the market is positive. It's pro-Cyril Ramaphosa and anti-President Jacob Zuma. They feel that his policies won't take the country forward, and therefore generally it would be a positive outcome from a market perspective if indeed he were to step down.
And I mean, fundamentally speaking, do you think the gains that we've been seeing of late in the rand are sustainable?
Well, yes, I mean, that's the million-dollar question, isn't it? Well, our fundamentals, our economic fundamentals are not doing so well. We have very high unemployment that ticked down a little bit, I understand, for the fourth quarter at 26.7%. But when you take the broader definition into account, we're still hovering around 40% when it comes to our economics, to our unemployment, pardon me. And then, of course, we have a massive budget deficit. And, of course, Malusi Gigaba is going to have quite a difficult time next week, assuming the budget goes ahead, finding money to plug that 50 billion rand gap. Chances are he's going to have put taxes on us. That includes VAT. It could be some more personal income tax and so on, and that could be regressive in terms of pushing economic growth going forward. So our fundamentals not looking great. The ratings agencies are going to be watching very carefully. If they kick in with more ratings downgrades, then it means that we could have some capital flight, and this would be very easy because we know that in the United States interest rates are going to go up. Other developed markets also rates likely to go up, so people will just flee to safety or flee to less riskier assets in those developed markets and move away from South Africa or go to more attractive emerging markets relative to us.
All right, in terms of retail and finance stocks, when there's a positive feeling about South Africa, these tend to do well. Is that what you're seeing?
What we're seeing right across the board on the South African equities today is everything is up. And I think this is just in line with global markets. We're seeing global markets having come up in the US, in Asia. And here in Europe, we've seen a little bit of some discounting going on the Paris CAC and the German DAX. But generally speaking, markets are up. So those consumer-facing stocks also doing well. Mining counters particularly doing very well today. They were up over 2.3% earlier before I left the office. So everything's looking good. The one thing that might destabilize things, the United States has their inflation number coming out tomorrow. If that's too high, it could create jitters. People may begin to worry about higher inflation, higher interest rates, and there we go again with a bit of a sell-off on equities. But we have to wait and see.
Yeah, Nompu, thanks so much for that. We'll leave it there for now. Our Nompu Siziba live from the JSC. We'll certainly get more from her at the top of the hour in our news at 1.